Good afternoon, everyone. I'm Katherine Coulter, and I'm with the Denton's Ottawa Employment Law Group. I'd like to welcome you today to our 11th webinar, which is part of our ongoing series of COVID-19 employment law webinars. Our speakers today are Andy Pushalik, Jeff Bastian, Stephanie Ciamenti, and Gergely Hegedus. Before we get started, I'd like to remind you about the outline of our webinar. After our speakers are finished with their presentations, there will be a Q&A session during which they'll be covering some of the questions that were posed during last week's webinar. During this webinar, there'll also be an opportunity for you to send in questions, which we'll try to get to during next week's webinar. And you can see this Q&A section on the right-hand side of your screen. Feel free to send us some questions. In the event that you have any technical difficulties, please note it in the questions section as well, and one of our technical experts will try to respond during the webinar. And finally, a recording of the webinar and access to the PowerPoint presentations will be sent out by email early next week to everyone who RSVP'd for today. As well, I'd like to remind you about some of our Denton's resources in the employment law area. If you Google Denton's, you'll be directed to our global COVID-19 hub, which includes dozens of resources from our Canadian colleagues as well as our global colleagues. And that includes our continuously updated global employment law tracker, which gives a snapshot into employment-related issues in over 70 different countries. In addition, the Denton's Canada COVID-19 hub contains our recently released Return to Work Employer Toolkit, which was mentioned on our webinar 2 weeks ago. With all of that in mind, it's time to move on to our speakers. Our first two speakers are Stephanie Ciamenti and Gergely Hegedus, who will be speaking to us about the Canada Emergency Wage Subsidy. And in line with my colleague Stephanie Lewis, who hosted 3 or 4 weeks ago, I wanted to give everyone some interesting facts about our speakers today. So Stephanie is an employment law lawyer with our Toronto office, and among other things, I'm told that she's a slow cooking queen. And if she had her way, she'd be running a second job doing slow cooker commercials in her spare time, but not that she has any. As for Gergely, he's a lawyer with our National Tax Group, but is an expert on all things related to the wage subsidy, and as a result, we consider him to be an honorary employment group member. Gergely is obviously another very fit member of our team, as he hiked all the way across the province of British Columbia across the Trans-Canada Trail with a friend a number of years ago. And by the way, for anyone who's interested in doing it, it apparently takes about 40 days to do the trek. And so without further ado, I'm going to pass it on to our two speakers. Thank you.
Thank you, Katherine. So Stephanie and I have been following the subsidy programs pretty closely, and we've already done a few presentations on this, which you'll be able to find on the Denton's website. However, since these programs are constantly evolving and the government recently made some new announcements, we thought it'd be appropriate to provide an update to you. So the government's published a number of claims to date, and this is current as of May 18th, 2020. So as you can see from the slide, there have been over 200,000 applications processed and approved. The majority of these applications are under $100,000, and about 9,000 of these are between $100,000 and $1 million. 223 are between $1 million and $5 million, and only 23 are above $5 million. And to date, there have been 100,000 applications received. So you can see that there's approximately 12,000 applications that have either been rejected or in the process of being reviewed. So for the initial claim period, there were over 2 million employees whose wages were supported by the subsidy program. And in the second period, there are currently over 700,000 employees whose wages are supported. Now this number will likely grow as there's probably a number of employers who still haven't applied for the second period yet. The dollar value of the subsidies paid is currently at $5.7 billion, which is far below the $73 billion that are estimated to be paid in respect of this program. And now I'll turn it over to Stephanie for the next portion of the presentation.
Thanks very much, Gergely. So one of the big headliners from last week's federal government announcement on the subsidy program is the announced extension to the program. The government extended the subsidy program by an additional 12 weeks, so it will now run until August 29th, 2020. We are anticipating that the 12-week extension will be again broken down into 3 4-week claim periods as set out on the slide, just by way of example. However, the exact claim periods are still to be confirmed by the CRA, and these are only projections at this time. It is also important to note that the government is permitted under the legislation to change the required revenue reduction during these additional periods, and even indicated in last week's announcement that they will in fact be reconsidering the 30% threshold for the additional periods. So the government announced that they will be consulting with key businesses and labor representatives over the next month on potential further adjustments to the program. So please stay tuned for further updates, particularly as it relates to the revenue decline threshold. Before moving on to the next slide, I also want to note that the legislation permits the federal government to extend the subsidy program up to September 30th, 2020. So depending on how the economic impact of COVID-19 continues to evolve, we may expect further announcements later in the summer about an additional 4-week extension to the program. So in addition to the extension to the program, the federal government also extended eligibility for the subsidy to ensure that it continues to support those employers hardest hit by COVID-19. These changes to eligibility are retroactive to April 11th, 2020, which means that the changes apply to the first qualifying period starting March 15th, 2020, and to subsequent qualifying periods. Eligibility has been extended to the groups indicated on the slide, each of which I will discuss briefly in turn. So with respect to the first bullet, partnerships will be eligible entities so long as non-eligible members taken together do not hold the majority of the interest in the partnership. So in other words, the fair market value of interest in the partnership held by non-eligible entities must not exceed 50% of the fair market value of all interest in the partnership. With respect to the second bullet, Indigenous government-owned corporations are now eligible for the subsidies so long as the corporations are carrying on a business and are tax exempt under the Income Tax Act, as well as their wholly owned subsidiaries that are carrying on a business and are tax exempt under the Income Tax Act. As well, partnerships for each partner of the partnership is either an Indigenous government or an eligible employer will be eligible entities for the purpose of the subsidy. So Indigenous governments include First Nation bands, self-governing Indigenous governments, and other comparable Indigenous governing bodies. With respect to registered Canadian amateur athletic associations, these are national associations responsible for the promotion of sport on a nationwide basis and are heavily involved in the preparation of Canada's Olympic teams. The government has now extended eligibility to include the national level RCAAs that are exempt under the Income Tax Act. Sorry, tax exempt, excuse me. With respect to registered journalism organizations, non-profit Canadian journalism organizations that register as qualified Dunnies under the new Registered Journalism Organization category were previously ineligible for the subsidy, but the government has now extended eligibility to tax-exempt registered journalism organizations. And finally, after a lot of concerns were expressed about the exclusion of private schools under the subsidy program, the government has now addressed those concerns by extending eligibility to include private colleges and private schools. So this includes for-profit and not-for-profit institutions such as art schools, language schools, driving schools, flight schools, and culinary schools. So since Gergely and I last presented on April 17th, a few more developments have been made regarding applying for the subsidy. So the CRA has confirmed that representatives may apply on behalf of clients. Representatives authorized at a level 2 or 3 will be able to apply for the subsidy on behalf of their clients through the Represent a Client service, as well as through the web forms application. Also, the CRA has confirmed that the processing of the subsidy will be performed at the payroll program account level. This means that the employers will have to file a separate application for each payroll program account. So for example, if an employer has 2 payroll program accounts or RP numbers and are claiming the subsidy for eligible employees under each account, the employer will need to file 2 separate applications. With respect to payroll cycles, an eligible employer's payroll frequency, whether biweekly, semi-monthly, monthly, has no effect on the calculation of eligible remuneration paid for the purpose of the subsidy. However, if an employer's payroll cycle does not align with the wage subsidy for the claim period, they will have to do a manual calculation to reflect the remuneration paid in respect of that claim period. Employers will not be permitted to use an average of the daily wages paid, and the eligible remuneration reported on an employer's wage subsidy application must reflect the actual amount paid in respect of that claim period. Employers should also be aware of reporting requirements under the subsidy. They will be expected to report the amount of a subsidy that was used to pay each of their employees' salaries by using a special code in the other information area at the bottom of the employee's T4 slips. And more information is expected to be released on the T4 reporting requirements before the end of the year. There are also record-keeping requirements. So employers must keep records supporting their subsidy claim, and this includes maintaining adequate books and records to ensure that their claim is accurate and complete and clearly supports their eligibility for the subsidy. And as you will see on the slide, books and records include ledgers, journals, financial statements, contracts, calculations, payroll records, and so on, as you will see. With respect to recording requirements and a business's decline in revenue, adequate calculations should generally be prepared and maintained in order for employers to support their claim that revenue has declined sufficiently to meet the revenue decline threshold. Similarly, with respect to record-keeping requirements and remuneration of eligible employees, in addition to showing the calculation of the wage subsidy claimed for each eligible employee, the documentation maintained must also include an analysis of the nature of the remuneration. So, for example, dividends and other ineligible remuneration should be recognized and clearly indicated as having been removed from the calculation. Any supporting documentation should be retained. Employers should also note that a signed attestation and record of any elections made for the purpose of determining an employer's qualifying revenue must also be maintained and made available to the CRA upon request. And for now, I'll pass it back to Gergely to pick up on retroactively paying and hiring employees.
Thanks, Stephanie. So, as many of you likely know, employers who are eligible for the subsidy can retroactively hire and pay employees that had been laid off or furloughed. But in order to do so, they must rehire and pay them before they include them in their calculation for the subsidy. And this may impact an individual's eligibility for the Canada Emergency Response Benefit. So if an individual was laid off, they applied for the CERB, and then they're retroactively hired and paid, then they may no longer be eligible for the CERB benefit. And I'll talk about that a bit later. So the government has come out with clarification in their Q&A on what constitutes eligible remuneration. So initially they stated that it includes salary, wages, or other remuneration, as well as fees, commissions, or other amounts for services. They have now come out with some guidance on tips. So controlled tips as well as declared tips are also considered eligible remuneration. So controlled tips are those that an employer controls or possesses and then must pay to an employee. And declared tips, which are only in the province of Quebec, are the amount of tips that provincial law requires an employee to declare to their employer along with their controlled tips. So direct tips, which are paid directly by the customer to the employee, are not included in eligible remuneration. So eligible remuneration does not include retiring allowances, stock options, any amounts that can be reasonably expected to be returned to the employer, or any amount that's in excess of the employee's baseline if it's reasonably expected that their wages would have decreased. And one of the main purposes of increasing the subsidy or increasing the amount of wages is to increase the subsidy. So an employer can't just increase their employees' wages, just increase the amount of the subsidy they receive. Dividends are also not part of eligible remuneration. And direct tips, as previously discussed, are not part of eligible remuneration. So if an individual was paid exclusively through dividends, they won't be eligible for the subsidy. The government also released clarity on what constitutes qualifying revenue in terms of investment revenue. So the qualifying revenue of an eligible employer is generally determined in accordance with their normal accounting principles. So if investment revenue such as interest or dividends from investments or in securities arises in the employer's ordinary course of activities, then it won't be an extraordinary item or on account of capital, and it will be included in their determination of qualifying revenues in accordance with their normal accounting practices. So what constitutes extraordinary items for qualifying revenue? The government's also released a bit of guidance on this in their Q&A, and they've stated that it's a question of fact. It's not defined in the Act, so you'll have to look on a case-by-case basis. So extraordinary items are not expected to occur regularly or frequently within several years. So grants or other government assistance that an employer is eligible to receive on a regular recurring basis is not extraordinary. Extraordinary items are not the normal activities or risks inherent in the normal operations of the entity. So if it's something that is outside of the ordinary for the business, it's likely an extraordinary item. And lastly, extraordinary items are primarily out of the control of owners or managers. So if they have control over these revenues, then it likely won't be an extraordinary item and will have to be included in their qualifying revenues. So is government assistance an extraordinary item? Well, the CRA would generally consider emergency government assistance, including assistance from provinces and municipalities directly related to COVID-19, to be an extraordinary item. However, if this kind of assistance is meant to replace normally recurring government assistance, then it won't be an extraordinary item and it will have to be included in revenues. Now, the government has released a lot of information about the different accounting methods that are available to different groups, such as affiliate groups or a group of companies or substantially all non-arm's length sales or joint ventures. So the government has indicated that the employers can change their accounting method from one period to the next. If they use it for one period, then they have to use it for both the current period and the prior reference period, but they can choose to switch the accounting methods in subsequent claims, and that's something new that the government has changed. So there's been a lot of questions asked about how the subsidy will interact with the CERB or CURB, and so as mentioned previously, an employer may retroactively rehire and pay an employee for a previous period. However, in order to qualify for the subsidy, they have to pay them and rehire them before they apply for the subsidy. But what happens to the employee? Well, they may subsequently become ineligible for the CERB benefit. So there's different requirements depending on whether it's the initial claim or the subsequent claim. So when an individual submits their first claim for the CERB, they can not have earned more than $1,000 from employment or self-employment income for 14 or more consecutive days within the 4-week benefit period. But when submitting subsequent claims, they cannot have earned more than $1,000 of employment or self-employment income for the entire 4-week benefit period. So if they end up earning more than $1,000, then they can become ineligible for the CERB, and they'll likely have to repay this amount. And now I'll turn it back to Stephanie for the remainder of the presentation.
Thank you, Gergely. So normally, with respect to outstanding returns, the minister cannot issue refunds when there are any outstanding returns. However, the CRA is permitted to pay the subsidy to an employer even if the employer has outstanding returns. It should be noted, though, that the CRA does have the discretion to withhold the amount of the subsidy payment in cases where there's a significant history of not complying with the duty or obligation under tax laws. Oh, excuse me. I'll go back a slide. So with respect to outstanding debts, if an employer has outstanding debts with the CRA, the subsidy payments will not be automatically applied against any of those debts. The CRA does have the discretion, however, to reduce the amount of the subsidy if an applicant owes or is about to owe a debt, and the CRA determines that there is a risk of not collecting all or part of that tax debt. So in addition to the monetary penalties for intentional or grossly negligent false statements or omissions and other misconduct, the government also announced third-party penalties and partnership liabilities. So this means that with respect to third-party penalties, if a third party, such as an accountant or tax preparer, knew or would reasonably be expected to know that the application contained false statements, it could be subject to a third-party penalty. And for this purpose, a false statement also includes a statement that is misleading because of an omission. With respect to partnership liability, partnerships will be liable to any penalties as if it were a corporation and may have to pay back any subsidy amount that it received for a claim. So finally, the last update that we wish to share with you are the proposed amendments to the subsidy program, which were also announced last week. We know that these proposed changes will not come into effect until enacted and for now simply remain as proposals. But the proposed changes include, for example, the support for seasonal employees and employees returning from extended leave. So the government acknowledges that the current definition of eligible remuneration can lead to unintended outcomes, such as when employees were on parental, disability, or unpaid leave from January 1st to March 15th of 2020, or when individuals are employed on a seasonal basis. So for this reason, the government proposes to allow employers to choose one of two periods when calculating baseline remuneration. So they may be able to choose using either the average weekly remuneration paid to the employee from January 1st to March 15th of 2020, or the average weekly remuneration paid from March 1st to May 31st of 2019. So under this proposal, employers would be able to choose which period to use on an employee-by-employee basis. With respect to the second bullet point on amalgamations, so corporations formed on the amalgamation of two or more predecessor corporations or where one corporation is wound up into another may not qualify for the subsidy since they would not have benchmark revenues to prove that they meet the revenue decline threshold. So the government now proposes to amend the subsidy to allow corporations formed on an amalgamation of two or more predecessor corporations or on a wind-up to calculate benchmark revenue for the subsidy revenue decline test using their combined revenues. And finally, with respect to tax-exempt trusts, so under the current rules, trusts are eligible for the subsidy as they are generally considered to be individuals for tax purposes. However, under the new proposal, there's still trusts with employees would continue to be eligible subject to the following added exceptions. So in cases where the trust is a tax-exempt entity other than a public institution, it would qualify only if a registered charity or one of the other types of eligible tax-exempt entities. In cases where the trust is a public institution, it would qualify only if it is a prescribed organization. So again, I know that these remain as proposals for now until enacted. So it is important to stay tuned for further updates into the summer. As already mentioned, employers may expect announcements regarding the introduction to any of these proposed amendments, as well as potential announcements on the decline revenue threshold, confirmation of the claim period that extend beyond June 6th, and potentially a further extension of the program as permitted under the legislation. So to conclude, if employers have questions relating to the subsidy, of course it's a very complex program, so please do not hesitate to reach out to any member of our tax or employment labor groups at Denton. Thank you.
Thank you, Stephanie and Gergely. Moving on, our next speaker is Jeff Bastian. Jeff is an employment lawyer with our Vancouver office. He's going to be speaking about working from home issues. Among other things, in terms of his interesting fact, Jeff rode his bike all the way across Canada a number of years ago, and almost as impressively, he apparently managed to go the whole trip without a flat tire. So, Jeff, we'll turn it over to you.
Thanks, Katherine. So this topic arose actually from a question posed in the Q&A at the end of last session or during last session, asking about what types of liabilities employers should be aware of with respect to employees working from home. So I've just attempted to sort of flag some of those liabilities to be aware of if employers haven't already turned their mind to them. And obviously, there's probably a number of employers that have people working from home currently and have been doing so for several weeks now. But what some employers are seeing is that working from home is working well for some employees, and maybe they might be considering whether that would be a more permanent type of arrangement to consider as well. So it's also something to keep in mind as you look at potentially more permanent working from home arrangements. So first, from an occupational health and safety perspective, for remote work, the home is an extension of the workplace, and so just like employers are obligated to ensure the health and safety of the workplace at the actual workplace, there is that obligation that applies for people working from home as well. So workers' compensation continues to apply, and occupational health and safety obligations also apply, even though the employee is working from their home. So one of the best practices to ensure that you meet those obligations is to ensure that you have a working from home health and safety policy. And so the purpose of that type of policy is really to clarify the roles and the duties and responsibilities, make sure that employees are educated about obligations for occupational health and safety even though they're at home, and are aware, their responsibilities. So those responsibilities might include things like continuing to report work-related injuries. So if they do sustain an injury that's tied to the work at home, just like they would at work, they would need to report that, and as an employer, you would also need to report that to the Workers' Compensation Board. Employees should be required to do an assessment of their home workplace and report any potential hazards that they see to their manager so that that can be corrected. And so you might use a survey or a checklist to help guide employees in terms of what types of things they should be mindful of when doing that assessment. Usually these types of working from home health and safety policies would include things like evacuating from their own home and where they would evacuate to in the event of an emergency, or how to contact you as an employer if there is an emergency. And it's also a good idea, especially if somebody's working from home and there's no one else at home, to have protocols and procedures in place for checking in with employees. The workers' compensation legislation has requirements that employers check in with employees working in isolation and alone at the workplace. And so there's nothing to say that that doesn't necessarily apply for people working from home. And so you might want to have sort of predetermined intervals that you would check in with somebody. And even though maybe the risk of an injury at home with no one around to assist might be a bit lower than at a workplace, it's still good to maintain contact with your employees, and that helps you get a sense of the level of stress that they're dealing with. If maybe there are mental health issues that you wouldn't otherwise be able to observe when you're working face-to-face with people. It's good to have check-ins. Another sort of topic or area of potential liability comes from the security, or I guess the lack of potential security from working from home, because it's harder to control that aspect for individuals working from home. So obviously, and I don't suggest that I'm any sort of IT or technology person, but obviously home computers and devices can be a risk to companies. Networks are only as strong as the weakest link. So best practices would be to have things in place such as password protection on all devices, antivirus software, those types of things. And it's also a good opportunity to revisit confidentiality and technology policies at this time, and remind employees that those are in place, have them review them again, and also so that they're aware, the current circumstances and challenges that we might be going through are not an excuse to not comply with the policies. Those policies should continue to apply more than ever now. So they shouldn't be, cutting corners and just emailing documents to their personal email accounts because it's easier. They still need to comply with those policies. And so you really want to avoid a situation where employees fall into bad habits or practices doing that type of thing, dealing with client information, and sort of treating it less securely as they otherwise would. And so that's something just to nip in the bud. Just a note about video conference meetings. We've heard all about Zoom bombing or Zoom hacking, and so when you're having sensitive video conference meetings, take steps to ensure that passwords are used, or waiting room options are used to prevent that type of access by people who shouldn't be in the meeting. Tied to that concern, there's also liabilities related to privacy. And so obviously if employees are taking home paper records, those can be lost very easily or fall into the wrong hands. So ideally, if it's possible to avoid using paper records at home, that would be best to just work electronically. If paper records are required, copies would be preferable than originals. But employees should be directed to ensure they have secure storage at home so other family members or visitors to the home aren't stumbling across confidential documents. And documents must be securely disposed of. So if somebody has appropriate shredding capabilities at home, that's great. If not, they should be required to bring those documents back to the office to be shredded and disposed of appropriately. USB keys can be a potential issue. They're so easy to lose because they're so small. So if it's possible to work remotely without USB keys, that's preferable. But if you need to use them, they should be encrypted and password protected in case they are lost. And then just a note about private phone calls from home. Obviously, it's a challenge to have those calls for people working from home, and so if they can be taken in private, closed doors, and using headphones and avoiding speakerphones, that's helpful to maintain privacy as well. And then just a last slide here about sort of some miscellaneous liabilities to keep in mind. It'd be best to communicate to employees that they shouldn't expect to have the right to be able to permanently work from home. So once COVID restrictions are lifted, and employees, if they are continuing to work from home, it should be clear to them that this is something that's being provided to them, but not as a right that they can expect to have. And if not, if they believe that this continues to be sort of the way that they do their work for such a long period of time that it essentially becomes a term of their employment, then there could be a potential risk that they say, well, if you require me to return to work, then I've been constructively dismissed. And so just making sure that employees are aware that this is sort of being extended to them as an accommodation or a temporary measure, and that you always have the right to require them to return to work once restrictions are lifted. That would be helpful to avoid those potential complaints or claims in the future. If you are looking at allowing some employees to continue to work from home more permanently, or even for a temporary basis, it's best to consistently apply criteria if you're deciding who will and will not work from home, because otherwise you potentially face complaints that people are being favored for whatever reason, and sometimes depending on what those criteria are, you want to avoid any criteria that could potentially differentiate between individuals based on a protected ground under human rights legislation. Otherwise, there's a potential risk of a human rights complaint if you're differentiating who can and can't work from home based on a protected ground. Obviously, when employees are working from home, it's more difficult to monitor employees and ensure that they're on task and available. And so that's a challenge that potentially could raise some liabilities. So maybe more frequent check-ins with employees might be necessary. It really depends on the nature of the business. Obviously for those businesses that have billable hours, the hours speak for themselves. But you may also look to software that allows team members to see real-time status of work or those types of things to keep an eye on how work is being handled while working from home. Just a note about the hours worked while people are at home. There are obligations under employment standards legislation to track the hours that employees work. And so it's important to make sure that you have clear policies in place with respect to hours worked and pre-approval from overtime, so that you don't face a complaint down the road that somebody says they were working overtime hours that you just weren't aware of and seek to be paid for that. So just a note to make sure that expectations are communicated clearly there. I put a note there about potentially reviewing expense reimbursement policies. And that really is just to sort of note that if your current policy maybe suggests to employees that they can go out and buy printers and paper shredders and anything they think they need to do their job, that could be potential unforeseen cost. And so that's just a note about that. And then finally, another last point to consider is insurance policies, and to consider whether the company's insurance policies cover working from home arrangements, or if any policies need to be updated. For example, if there are fleet vehicles for your business that are now being parked at employees' homes instead of the company's parking lot, does that need to be reflected in an insurance policy? And then finally, it might be the case that some of your employees' homeowners insurance will have coverage for loss or damage to company property, so that might be something to look into as well. So with that, I'll turn it back to Katherine.
Thanks, Jeff. Those were all really helpful tips. We're moving on now to our final speaker, Andy Pushalik. Andy is a partner in our Toronto office, and he's the head of our Ontario Employment Law Group. Not to be outdone by either Jeff or Gergely, I can tell you that Andy has climbed Mount Kilimanjaro, and even more impressively, he proposed to his wife on Kili. And, you know, frankly, we can all just go home now because I don't think any of us can aspire to that. Andy will be speaking about workers' compensation in COVID, and I'll turn it over to Andy. Thanks.
Thanks so much, Katherine, and I'm not sure if everyone can go home. I think it was more just a situation of ensuring that my wife would say yes when under the effects of altitude sickness. So, which maybe is a good segue when we're talking about workers' compensation. And we're now 11 weeks into this pandemic, and we are getting a few more questions from our clients about how the workers' compensation regime is applying in the time of COVID-19. The websites have actually been quite good for the provinces in terms of updating workers and employers on the situation and what's happening. So just a few statistics that I'm going to put up about Ontario and British Columbia. As you can see on this slide, Ontario has allowed 983 claims for COVID-19 related issues. As you might expect, these claims are predominantly in the healthcare sector, and the WSIB has published that data, and it indicates that about 60% of the allowed claims come from people engaged in either nursing or residential care facilities. The other thing that WSIB has done is they've established a bit of a service standard, and what they're saying is if a worker is filing a compensation claim for COVID-19 related issues, that is going to be processed, or at least the person will be contacted within 2 to 5 days, which is relatively short considering how the system usually operates. In terms of BC, the numbers aren't as high. BC's also had a fairly good result in terms of dealing with COVID-19. They've been able to flatten the curve. They're one of those provinces that have done a particularly good job. 134 claims allowed. Again, though, virtually identical in terms of where those claims are coming from. 60% again of those 134 allowed claims have been coming from the healthcare sector. So when you look at what the adjudication of COVID-19 claims is looking like, the key eligibility criteria, obviously the entire workplace compensation system is based on the fact that for an employee to be eligible for benefits, the injury or the occupational illness or disease has to be work-related. And that makes the adjudication of COVID-19 so very, very difficult because the nature of this virus, as everyone knows, makes it very hard to pinpoint where and when an individual actually contracted the virus. And what the provincial workers' compensation boards have been fairly uniform on is that when they're looking at these claims, when they're approaching an adjudication, they're going to allow it when they say that there is sufficient evidence to establish that the worker has COVID-19, so there's a positive diagnosis, and the risk in that worker's workplace was significantly higher than the ordinary exposure risk, which likely explains why the vast majority of the allowed claims are coming from, residential care facilities like long-term care facilities where we know that the experience in those facilities is much different than the general population in terms of there's a much more enhanced risk of workers and individuals in those facilities to contract the virus. The last thing I wanted to talk about before we get to the Q&A is you've probably heard in the U.S. experience, and maybe you've even heard in your own industry, this idea that, well, what we should do as workers come back is get the employees to sign waivers. And that would grant the employer immunity from any sort of claim for illness that may result from them working at the establishment. You really have to go back to first principles with this. And the entire workers' compensation regime in Canada, we don't have these big tort claims that you see in the U.S., these massive lawsuits over worker injury, generally speaking. And the reason why is because there's been a grand bargain. The grand bargain being the employers have agreed to pay into a system that is administered by the government and provides insurance for workers' claims for injury, disease, etc. In a return, there is a statutory bar on employees pursuing claims against their employer. Now, there's always exceptions to the rule, but that's the general principle that underlies this entire system. And one of those really important points about this system, therefore, is that the legislation in virtually every province has a provision which says that employees cannot contract out of their workers' compensation rights. So could you get an employee to sign a waiver? You could. It probably won't result in any sort of damages for you just having an employee sign something like that, but it's unlikely enforceable and is not something that is likely a best practice that you'd want to pursue. I think the better course of action is ensuring that you're properly covered, that your premiums are up to date, and that you're going to rely on the system that you've relied on the whole way through to adjudicate claims that are brought forward for COVID-19 so that employees will receive benefits where they're entitled to them, and you can go about managing your workforce. So, Katherine, very, very short today, and over to you so we can get to the Q&A.
Thanks, Andy. That was all very helpful. I'm going to stick with you, so stay on the line. We have a couple of questions that have come up with a number of our clients, and I wonder if you could comment on them. The first one is whether the law expressly requires employers to provide their employees with non-surgical masks.
So good question, and something that's become very topical given everything that's happened this week with the public health officials now saying that they're strongly encouraging people to wear non-surgical masks in public. And if you're in Ontario, you may have seen the statement from the Mayor of Toronto, John Tory, saying he's really encouraging employers to provide employees with non-surgical masks if they're going to be working. There is nothing in any piece of legislation that expressly requires employees to be provided with masks by their employers or require employers to provide any sort of reimbursement for employees purchasing masks. That said, there still remains the basic obligation to take all reasonable precautions in the circumstances to protect workers under health and safety legislation. I don't think, though, that we're to the point where the reasonable precaution or the basic duty under health and safety legislation is going to require employers to provide masks, although we may get there. You know that having been through the first 11 weeks of this, that the legislation is constantly changing, guidelines have been constantly changing, and in particular, guidelines about masks have really gone back and forth. So I'm not saying it's not going to happen, but as of right now, there's no express legislative requirement that would mandate an employer to do that.
Thanks, Andy. And one other question. Do employers have a duty to inquire into whether their employees have health conditions which might make them more vulnerable to COVID, such as heart issues or pulmonary issues?
Another good question, and something that employers everywhere are grappling with as we start to reopen the economy. Again, even though COVID-19 has certainly changed so much, there are still some basic principles of employment law that have not changed, and those principles around employee medical information to this point remain the same, which is employers should not be asking about an employee's diagnosis or medical condition. It can lead to serious discrimination issues if you have people who are volunteering the information. I mean, that's one thing, but we would not encourage employers to be going and actively asking employees, are you able to return to work? Yes, no. If answer is no, is it because of a health condition? If you answer the health condition, what is it? Like, you don't want that information on your systems. And so if we get into a work refusal issue, we can deal with it differently, but certainly we're not telling employers to go and find out exactly what health ailments employees may be experiencing right now.
Thanks, Andy. Jeff, let's move over to you and talk a little bit more about questions arising out of your topic today. If employees are working from home and they have concerns about ergonomics, their wrists are hurting, whatever else, does the employer have an obligation to provide things like chairs, computer stands, or other types of equipment for their home office?
So I've mentioned employers have an occupational health and safety obligation to ensure that the employees have a healthy and safe workplace. And so part of that would include ensuring that employees are able to work in an ergonomically sound manner. But that doesn't necessarily mean that an employee needs a new chair or a computer stand or other equipment. It might mean something as simple as ensuring the employee's existing chair or table are adjusted appropriately. For example, you might add a box to prop up a computer monitor so it's at the right height. Those types of things might be more appropriate rather than having to sort of outfit your entire workforce with brand new equipment. If adjustments to what employees currently have are not possible, then employers may need to consider whether it's necessary to provide equipment that is necessary to perform the work. And just sort of a caution about employers requiring employees to purchase their own equipment. Most employment standards legislation actually prohibits employers from passing along business costs to employees, so that's just something to be aware of. Whether or not a certain piece of equipment would be considered sort of a business cost would be something to look at on a case-by-case basis, depending on what the equipment is and the work, but just something to keep in mind as well, that you can't just say, well, you're responsible for everything.
Thanks, Jeff. And I suppose that if the employee has equipment in the workplace that addresses those issues, the employer could simply make arrangements to get that equipment to the employee's home office for the time being. Is that right?
Exactly. So if there are things at the workplace that would be helpful, then having the employees use those at home would be fine. Obviously a challenge there would be if an employee ends up being terminated while they're at home, getting them back can be a bit more of a challenge. But certainly if they have something at work, a chair or something that would be helpful, then arrangements could be made just to have them use that at home.
Thanks. And that's actually a great segue to my next question. Can employers terminate employees who are working from home but who don't appear to be working or available for regular work hours?
So the short answer is yes, but it would be even more difficult than normal to meet the already high threshold to terminate for cause, because it's harder to implement and monitor performance improvement plans and coaching for employees. So, if the issue reached the point of having to terminate, it likely would need to be done without cause. And just an additional point, sort of touching on what Andy spoke about, before deciding to terminate, would be prudent to consider if there's, what reasons there are or might exist for an employee's lack of availability or the way that they're working, to be, mindful of whether it might be due to a protected ground, health issue, childcare issues, those types of things, especially in the current circumstances.
Thanks, Jeff. Gergely, over to you. Can employers pay employees their full wages under the wage subsidy?
Yes, there's no requirement for employers to reduce the amount of wages of their employees. But if they're basically the subsidy is limited to 75% of their eligible remuneration, or 75% of their baseline remuneration, which is their average weekly earnings between January 1st and March 15th, 2020.
Thanks. And on a related note, can employers increase wages for their employees when they're in receipt of the wage subsidy?
So they technically can increase the wages of their employees, but if the main purpose of the increase is to increase the amount of the subsidy, then that amount of increase won't be counted towards the subsidy. So if an employer just wants to increase the amount of their subsidy and subsequently increases their employees' pay, then that amount won't qualify for the subsidy.
Thank you. And Stephanie, over to you. Can you confirm whether there are any limitations placed on a qualifying employer to prevent them from making future layoffs or terminations if they're in receipt of the wage subsidy?
Thanks, Catherine. That's a good question. So at this time, there are no requirements set out in the legislation that would restrict qualifying employers' ability to make either future business decisions or operational decisions. Employers may continue to restructure their business as needed. The subsidy also does not impose any additional obligations on employers to retain their staff for a specified period of time.
Thanks. And also, should an employer wait to file their wage subsidy application until laid-off employees are recalled and paid for the April claim period?
Thanks, Catherine. So yes, in order to qualify for the subsidy, employers must recall laid-off workers and make sure that the retroactive payment for the laid-off workers is processed and received by the recalled workers before applying for the subsidy. So it's very important that both things happen, that they're in fact paid and recalled.
Thanks. I think we probably have time for one more question for each of you. So back to Andy. Mass terminations. We are starting to see a little bit of that happening in Ontario, and of course mass terminations have their own rules in terms of when they kick in and how that increases the notice periods. So along that line, are all separate legal entities treated as one company with the Ministry of Labour?
Good question, Catherine, and again, hopefully this is not going to be something where we have to see a lot of these over the next little while, but the question is coming up. This is really a determination of, are these other companies or these business entities, are they related? And what the Employment Standards Act does in most provinces, but I'll talk about it in Ontario, there is a provision in the Ontario Act which ensures that separate persons, so separate legal persons, will be treated as one employer if there are kind of two key requirements are met. One, the businesses are carrying on associated or related activities or businesses, and two, these activities are being carried on by, two or more entities. So it's not just one company. There's obviously, to have a related company, there needs to be multiple entities. And so what the Ministry of Labor would look at, or what a judge would look at, the Ministry of Labor has come up with a number of different factors, and the most significant factor is common management. So if you have a whole bunch of companies that have been incorporated separately, but they're all being managed by a single CEO, it's going to be a highly significant fact in favor of those businesses being seen to be related for the purposes of Employment Standards Act. The other factors you're going to want to know is, is it common financial control? Is there common ownership? Do all of these separate entities exist or share a logo and have a common trade name? Is there an intermingling of employees? So are you transferring one employee from, say, one location to another, even though the locations are separately incorporated and are purported to be separate entities? Are you sharing assets? This list is not meant to be exhaustive, and depending on the situation, there's going to be different relevance attended to each of these factors. But the more these factors tend to show relation, you're going to have a tough time defeating the idea that these other entities aren't all one company for the purposes of the Employment Standards Act. And why is that important? Well, the threshold for a mass termination is 50 employees over a 4-week period, and so while you may have one part of the business which has dismissed 30 employees, and so you're under the threshold. If you have another part of the business which is separately incorporated but found to be related, and you have dismissed 30 employees there, then you've triggered the mass termination. So and there's other issues. There's whether or not it's at the same establishment, all of those types of things. So all that to say, if you have concerns about whether or not you're a related employer, it would be worthwhile to have a call with whoever your regular Denton's employment lawyer is.
Thanks, Andy. And moving back to Jeff, can employers require employees to continue to work from home once the pandemic is over?
Yeah, I mean, I think in the current circumstances, if it's revealed that some positions it might be preferable to have the employees continue to work from home after the pandemic, then employers do have the ability to make such changes. The risk, I think, as with any unilateral change, if the employee doesn't agree to it or that's not their preference, is whether it would trigger constructive dismissal. And so whether or not a requirement to work from home would amount to constructive dismissal will depend on the facts of each case, including the nature of employment. So, for example, it would probably be a greater concern or greater risk if the employee is unable to work as efficiently at home and as a result has to work significantly more hours to carry out their duties. Or, for example, it could be a greater risk if only a few employees are being required to work from home and they feel like they're isolated or being cast off for the rest of the team, and potentially for discriminatory reasons. They could raise human rights issues there. So just things to be aware of. And to minimize the risk of constructive dismissal, changes like that can be implemented by providing advance reasonable notice to the affected employees of the change that will be occurring at some point down the road. So that's something to keep in mind as well.
Thanks, Jeff. And one final question, this is for Gergely. Are there any restrictions on what can be done with the wage subsidy funds?
Thanks, Katherine. At this time, there doesn't appear to be any guidance indicating that there are restrictions on what the subsidy can be used for. Now, obviously, the employer will have to have paid the employee their wages or salary in order to qualify for the subsidy, so the money will already be spent. But in terms of when the employer actually gets the funds back from the government, there's no guidance or requirements or restrictions on what these funds can be used for.
Great. Thanks to the team. So that's it for today. I'd like to remind everyone in the audience that we'll again be hosting another webinar next Friday at the same time. That'll be dealing with further return to work issues. And I see from the Q&A today that there were some questions about COVID testing for employees and customers. We have discussed that in the past, but we may be talking about some of those particular return to work issues in more detail next week. And so I would encourage you to look for your email invitation early next week, and we'll be very happy to have you join us once again. Thank you very much to everyone for listening today, and keep well. Thank you. Bye-bye.